Thank you, Jess, and welcome everybody. This year, Canada and Brazil listed their first digital assets ETFs. In other jurisdictions, such as the US and Asia, the market is still awaiting regulatory approval for this to happen. Digital assets ETFs are the result of combined effort of diverse market participants, from ETF issuers, custodians, fund administrators, index providers to exchanges. An effort that has the sole objective of providing investors around the globe a regulated product that offers digital assets exposure. OSL has been providing service for some of these firms, and we are very proud of being able to contribute to this important chapter of the digital assets industry history. To talk about the past, the present, and future of digital assets ETFs, we have here very special guests. I would like to invite to this panel Melody He, Manager Director at CSOP in Hong Kong, David LaValle, Global Head of ETFs at Grayscale in US, Xian Wasserman, Global Head of Index and Solutions at Nasdaq in US, and Theodoro Fleury, Portfolio Manager at Care Capital in Brazil. I would like to start by asking you to tell us in 1 minute, if possible, the background for your firms, what you think about digital assets, and in your opinion, how important is having a regulated, liquid, tradable product such as digital assets ETFs available to investors. Melody, why we do not start with you, please?
Yeah, sure. Hello, everybody. So I'm Melody. I look after business development at CSOP. We are a Hong Kong-based asset management firm focusing a lot on ETFs. So we have ETFs actually issued in Hong Kong, Singapore, US. So what I think about digital asset is obviously it is a trend that cannot be ignored. The key is how to combine, I think, crypto with a traditional asset, whether it's traditional asset management industry, whether it's ETFs or funds.
Okay, David, you want to go next?
Sure, thanks for having me. We're happy to be here. Grayscale Investments is the largest digital asset manager in the world. We're probably most known for GBTC, the largest Bitcoin fund in the world, coming in at over 25 billion on assets. Obviously, I think the development of the digital asset space as a new asset class and allowing liquid funds to be listed and traded will allow the most diverse pool of investors to seek an investment in digital assets in an asset wrapper that they're familiar with, that they have confidence in, and that has been battle tested over the past 20 plus years.
Cool, and Xian?
Okay. Thanks for having me. So Xian Wasserman with Nasdaq. I head up our index services business, but holistically, here at Nasdaq, as you guys are well aware, a diversified exchange and data business. In regard to the overall crypto ecosystem, Nasdaq has touched the space in a variety of ways. More early on, regarding on our technology business, providing our matching engine for crypto exchanges, along with our surveillance technology as well, providing that to the overall exchange landscape. Also, as a listing venue, we have through Nasdaq Stockholm, some various kind of ETPs listed for crypto assets, and also here in the U.S., working closely with regulators and issuers and bringing listed ETF product to market, along with it being a venue for listed companies such as Coinbase and others. On the index side of the business, we had launched our first index for the landscape back in February this year, the Nasdaq Crypto Index, where we certainly see that need for regulated ETF product, as they put through the battle-tested structure that investors kind of know and love. To be able to open up the playing field for different avenues for people to access crypto in a safe way that they're familiar with. So, we're looking forward to supporting the growth of that ecosystem through the index side.
Okay, Tel.
Hi everyone. Thanks for having me. Thanks to OSL. QR Capital is a holding company that builds and invests in the blockchain ecosystem. QR Asset Management is today its main business, its main subsidiary, and QR it's a 100% focused, crypto-focused asset manager. We have today 6 funds, 2 of them ETFs. We have a Bitcoin ETF and an Ethereum ETF traded on B3, which is the main Brazilian exchange. And I think that this allows for better knowledge and democratization, if you want, of the crypto investments, because with a value as low as around $3 or $4, an investor can go to its broker and buy shares of an ETF of a crypto asset without having to worry with private keys and passwords and all that thing. So I think that those regulated products can be a way of investors to getting to know the space and the assets in the ecosystem.
Okay, and when we talk, Canada and Brazil were the first big markets to list digital assets ETFs. We are talking about $5 billion in assets now. When we talk about QR, okay, where are you now? Can you give more details about your products and what were the challenges to offer digital assets ETFs in Brazil?
Yes, sure. So Brazil has, since the end of 2018, a pretty modern regulation, if you want, regarding investment by institutional investors in crypto assets. There was a regulation issued in September 2018, which allowed funds and institutional investors to access the crypto markets, respecting some kind of boundaries. We started our funds after that authorization, and we launched our first funds. We prepared, we gathered the team and structured the asset management during the year of 2019, and we launched the first funds in early 2020. And by the end of the year, we thought that maybe the market was mature enough to have to file for an ETF here with our regulators. So I think the main challenges was for the regulators to see that it was a benefit for people in general. They could invest in the space with a lower cost and more transparency. They have the CVM, which is the Brazilian SEC equivalent, and the B3, which is the trusted exchange behind them. So I think the main challenges was to make it a marketable product for the general investor, not only accredited investors, which our previous funds were targeted for, but to make it more acceptable for the general investor.
Okay. And Melody and David, what's the current stage for the regulation in Asia and the US? We know that Brazil has a huge capital market industry, but where we are right now, when we talk about Asia and US, is the industry just waiting for the regulators' approval, or there is something else that needs to be addressed? Melody, you can go first, please.
Yeah, sure. So I think first of all, Asian regulators are looking at what the US SEC will do on crypto ETFs. And I think there's, talk of whether or not the futures ETF will go first and then the physical ones. And then I think in Asia, there's a couple of things that's happening in different jurisdictions. So for example, I think Singapore started, granting the licenses on Payment Services Act. So there's a couple of things that's happening in different jurisdictions that is seemingly like it's also moving forward along the crypto space. But I think in Asia in general, regulators do hold a relatively more conservative stance. as compared to Europe and US and Canada. So waiting to see what will happen. It's exciting.
Sure. And how about US, David?
So, this has been a conversation that's been going on for the better part of the past 8+ years. I think one of the most important things, as Melody pointed out, is, the U.S. regulators, the SEC, is now, has been kind of positioned or has suggested that they're open to entertaining filings for Bitcoin futures ETFs or ETFs that are holding Bitcoin futures in a 40 Act wrapper. For a very long time, this was a question of, if there was going to be an availability of a Bitcoin-related ETF in the marketplace. I think now it's really a question of when there's going to be a Bitcoin ETF in the marketplace. So currently, the chair of the SEC, Chair Gensler, has, suggested that he and the staff would be open to reviewing these futures-based ETFs. That would be kind of a critical step in the right direction towards getting a spot-based ETF approved in the marketplace. I think currently the market is really kind of waiting and seeing. There's a number of filings that are in the market that could be coming live as soon as, in and around the October 18th to October 20th timeframe, with several other filings behind. And so we're very actively watching how the SEC is going to react to those filings and how the issuing community is going to respond to those filings. And there's a potential for us to have some products in the marketplace that can be, invested in by the broad public.
Yeah. And Xian, do you want to add something? What's your impression when talking with ETF managers in US?
So yeah, similar to as Dave outlined, that everybody is looking towards all the comments made by the SEC and Gary Gensler in regard to the willingness to hear applications of the 40 Act fund using Bitcoin futures, almost laying out a roadmap for how to bring the first product. So certainly everyone's kind of waiting and seeing over the next, I'd say also the next few weeks to months to see how those play out, and then it'll be very interesting kind of longer term from there. I would certainly agree with that thinking that Bitcoin futures ETF would likely be the first to come to market here in the US, to then see how the rest of the the ecosystem evolves and the SEC continues to evaluate the spot market and then things beyond Bitcoin. As it's so early days in regard to the development, it'll be as we had said before, a step in the right direction in terms of having a first product in market.
Yeah, and also as
I would add.
Go ahead, Dick.
If it's okay, I would add, theoretically, one would think if Chair Gensler is comfortable with a futures-based ETF, now the future is inherently and by definition a derivative that's based on the spot market, that we would infer that, he and his staff would be open to hearing about filings that were pertaining to a spot or kind of a physical Bitcoin ETF. And so, I think, history has shown and the commercial success has shown that, ETFs that are based on commodities that can be reliably stored, like gold, for example, have been much more commercially successful and much more, preferred by investors in a physical back or a spot backed product versus a futures product. So we're eager to have the chair, position and the SEC position to review these spot based filings, in due time.
Terrific. And so, Xian, in the previous conversation, Marcelo's mentioned the relevance about the index for the ETF industry. So almost every ETF in the world has an index as a reference. So what's, in your point of view, what's the relevance of index providers to the ETF industry, and how are they helping the digital assets ETFs growth?
Sure. So the overall index provider role in the ETF ecosystem is providing that the underlying kind of basket and expression in a rules-based strategy, what the composition of the portfolio would be. As we're starting off in the digital asset ecosystem, it's predominantly single asset products that people have been bringing to market. And there still is like a role for index providers in that regard, and regarding like an appropriate reference rate that's calculated utilizing multiple pricing inputs from exchanges that would be designed in a way to be resistant to manipulation. But once you take particularly a step beyond the single assets, the indexes become particularly important as a way to express how you're accessing the market. So as we think about that here, like at Nasdaq, as we were thinking about designing an index, for this asset class, it was the same types of principles that we would have for most other strategies or asset classes, to have something that's representative of the overall asset class, that's also like investable, so that someone could effectively track that, but also adaptable, particularly for the crypto asset ecosystem. It's important for an index approach to adapt over time to reflect how that ecosystem is evolving. And so index providers starting off first with beta, which is some of the first things that we've really kind of stepped in to try to address in the market, is providing an appropriate benchmark that is institutionally investable for beta, will be important underpinning for all ETFs that go beyond the single assets. And then over time, like you'll also see then a combination of rules-based indexes, where index providers provide a strong value prop, but then also on the other side of the coin, active ETFs as well. So we certainly see like a lot of innovation and change to occur down the line as like ETFs start to get approved, and the overall regulatory environment becomes more comfortable with the spot market like underlying product, and index providers will be a key part of that ecosystem in supporting that growth.
For sure. And Melody, when we talk about product development for ETFs, so indexes are a key part of the equation. Can you tell us more about how relevant they are for alternatives ETFs, and how they can be for digital assets ETFs?
Sure. Yeah. So I think Xian already touched a couple of points, but I think really from an index perspective, kind of the balance between being able to get regulators comfortable with the index versus kind of building the whole ecosystem, meaning the market makers, the clients, the institutional retails, also being able to understand the index and the differences between the index and the performance, I think is very vital, especially to, I think, crypto alternative ETFs in general, because they're trading a very different way than traditional asset classes, right? So they trade 24/7 in the crypto side. There's obviously different valuation points that you can extract from the exchange, like Xian has said. I think that's vital, right? What exchange is included as part of the index? Are those reputable exchanges? And also, I think the index building part for crypto is more difficult in a sense than traditional asset, because you also need to adapt to changes, right? Screen for suspicious trades, or screen for activities or valuation points that should not be included as part of the valuation points, index close or index points. I think those are very important. So kind of the index companies obviously need to, and also the issuers really need to understand the crypto in and also how it operates on different exchange in order for this everything to fall into pieces together. And I think on the market making side or index tracking side as well, because actually it is impossible to buy from all of the different exchanges that's included in the valuation points of an index. So there will be some differences, and how that differences can be explained to investors, to regulators. That's also quite crucial. Yeah, and I think market making side of things as well, right? The market makers, maybe they trade on a few and not all, and there will be differences, and how that differences can be accounted for to be hedged, or to be part of the bid-ask spread that they show on ETFs. Those are all key considerations, I think, for everybody, and that really revolves around the index. So kind of the index methodology is quite key as the communication between all of these counterparties in the ecosystem.
Yeah, sure. And we as a liquid provider, we need to manage also this. It's very relevant for us understanding the index methodologies and also understand the importance and the relevance of the tracking error for those index. So when we talk about portfolio diversification, so alternative investments have the potential to add return and reduce the volatility, so the non-correlation effect. I would like to know from you, so David, how digital assets ETFs can benefit investors' portfolio? How they simplify this asset class access?
So look, I think you said it correctly in stating that it's a new asset class, and that asset class is going to offer an opportunity for diversification. And the opportunity for diversification will maybe not reduce the overall volatility of the portfolio necessarily, but certainly give a diversified experience and the opportunity to diversify within that digital asset class. As the growth of the asset class and new coins are coming to market, new products are coming to market. I think critical to allowing for proper asset allocation is many clients are utilizing ETFs to make active decisions in their portfolios. So despite the fact that they're thought of largely as passive products, they're making very active decisions through asset allocation. And so if we can get some of these products and some of these digital assets to be housed within an ETF structure, it'll allow clients to very reliably create asset allocation decisions, utilizing the ETF as the tool for them to make those decisions.
Nice. And Theo, do you want to add something about this?
Yes, there are very known studies of the benefits of adding Bitcoin, and we did some research with Ether as well on adding small percentage of crypto assets in a diversified portfolio. The benefits are clear. You attain the same levels of return with a reduced level of risk in all the simulations. But here, I wanted to add a topic that it's more present here in Brazil, because when you add a crypto assets or a crypto ETF, that are products, they are dollar denominated. In a country like Brazil, where it's an emerging country and you have a volatile currency, despite investing on a volatile asset like crypto, you are adding some kind of hedge, because you automatically get an FX exposure by buying those assets. And I think it's the benefits of that diversification through crypto assets are very are even stronger in emerging countries with weaker currencies.
And Theo, what kind of flows are you seeing going to the Brazilian ETFs? Are we seeing institutional investors, family offices, funds using the ETFs as a source of portfolio diversification?
We start to see an interest, but here in Brazil, the ETFs are still more a retail product. If you want some data we launched two ETFs earlier this year. One 100% BTC, Bitcoin ETF. All products spot held. We buy spot currency and custody it. So for the Bitcoin one, we did a kind of an IPO with an offering, with banks participating and everything, and it started with 10,000 investors, 10,000 small investors, and today we are after 4 months. We are at 22,500 shareholders. For the Ethereum one that we launched early August, we had a different approach to fast track the launch a little bit. We anchored it. We did a direct listing with 7 funds, and in 2 months we have already 7,500 shareholders that probably bought those shares at the exchange. So it's still a very retail and pulverized, if you want, base of clients. But we see something that impressed me was that here we see in Brazil the Ethereum ETFs have a larger volume and liquidity than the Bitcoin ones. And I start to see some kind of institutional interest from equity asset managers more in Ethereum than in Bitcoin. That surprised me a bit.
Yeah, Ethereum has appeal for the private sector. So, and Dave, there's one question that's, what's the value can US crypto ETFs bring to the market as compared to what Grayscale currently offers?
It's an awesome question. Judging from what we're seeing in the Canadian market, just ballpark numbers in the 4 to 5 billion in assets, and knowing that the U.S. market is roughly 27 times the Canadian market, we could reliably see well in excess of 100 billion in assets by using some simple math there. But I think that's probably a light number when you judge from the fact that currently what is currently been invested in Grayscale products and GBTC has really been limited to qualified investors. And so the opportunity for the broadest range of investors, from a self-directed investor, retail investor, all the way to the largest institutions in the world, we could see some pretty impressive AUM numbers. And I think that's why we're all focused so closely on the SEC's posturing and positioning around the potential for not only a futures-based ETF, but also a physical or spot-based Bitcoin ETF. And again, we're very strong proponents for the SEC to simultaneously launch or allow for both futures and spot-based ETFs to be launched to allow investors to choose which exposure they would like to have in the form of an ETF.
Okay, and Xian, what's your expectation regarding U.S. investors? Do you think that institutional investors are waiting for the ETFs?
Yeah, so it goes across the spectrum: institutional investors, advisors, retail. There's a large swath of the investment community that are just behind the curve, the learning curve, that are still learning about digital assets, have a lot of discomfort about accessing it directly, and the risks of holding the keys, or working directly with some of the custodians. And so they very much have been drawn towards either starting to evaluate some of the private funds that are available in the US for accredited investors, or very much also waiting for ETFs to be approved. We're starting to see a bit of take up holistically across a number of different providers in the US, with a number of the private funds from different providers, whether it be single assets or basket, kind of index, or actively managed funds, but still very kind of early days. And so the ETF, once that is eventually kind of brought to market, will very much kind of open up the willingness to consider and onboard on the platforms, access to crypto for clients.
Okay, and Melody, what are your thoughts about institutional investors in Asia using the digital assets ETFs as an access to the class?
Yeah, so I think really the ETF vehicle or kind of public fund vehicles in Asia, I think really has its own merits, just simply because I think the regulators in general in Asia tends to be more conservative, and especially I think regulation on banks, insurance companies, which actually means for even if some institutional clients wants to directly participate, or they prefer to directly participate in the crypto space, I think it's quite difficult for them to even internally get approvals to do account opening with exchange, pick their own custodian, so on and so forth. So I think a more public kind of a vehicle listed on an exchange they're familiar with, directly traditional exchanges, or public kind of fund products would actually be able to help them with a lot of the issues that they're facing internally, especially to do with operational risk management, so on and so forth. So I do think it's actually quite important for institutional clients here in Asia.
Okay, thank you. And let's do our last round here, and talk about the future, about product innovation. I would like to know and to ask each of you, what can we expect about the digital assets ETFs future? Are your companies planning to do something different? So I know that Xian is building index. What we can expect and where the industry is going. So where industry is coming and going in the next 2 or 3 years. So we are talking right now about futures and spot ETFs. What we can expect about the next years. You want to go first, Melody, please?
Yeah, sure. I can just talk about some of the, I guess, innovative changes that has happened in Hong Kong, Singapore, Asia in general. So actually, in the past few years, this has been already done, have already happened in US, Europe, long time ago. But in Asia, in past 3 years or so, there has been a wave of developments of, for example, derivative-based ETFs, swap-based, futures-based, actually just happened in past 3 years, leveraging inverse products, thematic commodities products. Actually, there has been a lot that has been launched in past 3 years. Also, active ETFs has started last year and this year in Hong Kong as well. So I think we are still, in terms of innovation, we're catching up to kind of the more developed markets in terms of ETF. And I think in the crypto space, obviously, it's something that everybody is watching for, that innovation. Yeah.
Okay, and you, Xian?
Over the next 2-3 years, I'd say a lot of the focus will be, first bringing the single asset Bitcoin product to market. But beyond that, I think it'll be like a lot of build out of single asset products, enabling access for investors for individual assets instead of kind of buying them directly. We've already seen that start to build out quite a bit in the European ETP landscape. So I would certainly expect to see that over time continue in the US and Canada and elsewhere, as regulators start to become comfortable with assets beyond Bitcoin and Ethereum. And once that step is taken, it'll be about indexes for expressions of the asset class. And so that's one of the key focuses that we have here at Nasdaq with the index group, with the Nasdaq Crypto Index, is positioning that as a benchmark for the asset class. And I certainly expect to see there'll be numerous products that will come to market and various competitors to have that offering for beta.
Okay, and Yuta, what we can expect in Brazil?
So from our side, for listed products for ETFs, we like the single asset thesis for crypto assets, and we already launched the Bitcoin and an Ether one. So I don't think for now that's a third asset that could justify an ETF being created. We are focusing more on increasing the AUM and liquidity of those products. But we at QR, we started with actively managed funds in a time when the market wanted beta. They didn't care much about alpha. So now that we launched the products, the Bitcoin and Ether ones are the biggest one in Brazil. The single asset ETF, ours are the most traded. So maybe if the market evolves where we can launch an actively managed fund in the future, an actively managed listed fund. I think B3 still doesn't allow for that, but maybe it could change shortly. We have a good experience with active management in crypto assets, so that could be a way.
Terrific. And you, David?
When regulations into ETFs, which allows us. And so we have current 15 products in the marketplace. We're going to be currently have products, and we're really positioned to meet the demand of our investor base and to be launching products that we feel like are going to be commercially successful and are going to meet the needs of all of our investors.
Okay. So I would like to thank you all very much for sharing with us your experience and views about this important moment of the industry. We are going to have a quick break, and we'll be back in 5 minutes to talk about the institutional adoption of derivatives. Thank you very much, all.
Thank you very much. Bye for now. Thanks.
Thank you, everyone.
Thank you.
Thank you.